All right, what's going on, guys? Thanks for joining. It is Monday, August 26th. It is 9:40 a.m. Eastern Time. And today's live stream is really going to be going over the positions that I have open and really highlighting what the game plan is going into quarter four. There's going to be a lot of volatility. We have the Federal Reserve making their decision on what is going to eventually happen with the Fed fund rate, whether they're going to reduce it 25 basis points, 50 basis points, or leave it as is. And then also we're going to have the presidential election coming up, which is, obviously there's different policies that have been presented by different candidates, and the market is going to react accordingly. So we're going to talk a little bit about that, but let me go ahead and jump in. So I'm going to go over what positions I have open right now. I may open some positions while we are live streaming currently, and then we will take a Q&A at the end. All right. Any questions you may have, feel free to just ask them in the comments section. So let me go ahead and present a share screen. I'm going to go ahead and do good old Robinhood. All right. So let's see what we got here. We'll go ahead and start with, so one of my goals for quarter four is to really reduce a lot of the margin that I'm using. I don't, sometimes you get too comfortable using margin and you have to be very, 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 very careful because things can go sideways very fast. And the last thing you want to do is take possession of margin or take possession of positions, because at that point, then you're paying for margin, right? So me, for example, I'm using about $4,500 of margin because I got assigned on a position that I didn't want to. I've been paying about $7 or $8 a week on this margin cost. So what you want to do is just eliminate margin used, right? Next level risk is using collateral or using margin, and then zero risk outside of your portfolio holdings is not using margin. And going into Q4 and what's going to be happening in the next couple of weeks, I want to reduce it as much as possible. So we've got American Airlines right here. We've got a $10 put on American Airlines expiring at the end of the week. We opened this last week. What is American Airlines? American Airlines is up. It's about $10.50. Look, I'm going to leave this position open, and I'll tell you why. If you look at the 5-year chart, the lowest it ever got was $9. And this was during COVID when people assumed that airlines were going to be stopped, right? So in my book, worst case scenario, and look, this is this is when they went bankrupt after the financial crisis, but 10.50. So, I feel pretty comfortable at $10, to be quite frank. I think travel is going to pick up. So I'm going to leave these positions open. Right now we're already at 53%, small position, $70, nothing crazy. So we'll leave that open. CleanSpark. So CleanSpark is the one that I got caught and I'm using margin for. I've been doing pretty good with CleanSpark in the sense of I had sold a few puts and collected some good margin. So when I take all of that into account, my break even is somewhere between $13.50. So as long as I can get above $13.50, I am going to completely terminate this position, just because I want to reduce my core holdings to really be primarily Tesla, to be very frank. So we'll leave that as is. What is CleanSpark at? I know it went up significantly last week, so it's at 12.26 and it's down 2.5% today. If we look at the weekly chart, it went up all the way to 12.68. So look, I feel okay holding this. I have stock collateral, 400 shares. I do have, I believe, 700 shares of CleanSpark. So I'm going to wait for a green day, not today, but when CleanSpark turns green, and I'll sell some calls on that. So for now, I'm going to leave this open as is. I think 13 is a pretty good spot to be in. Intuit, I'll talk about Intuit at the end, because Intuit was one of my high risk plays that involves basically buying a long-term call, a leap, a short-term leap, if you will. It wasn't crazy far out. And I was playing earnings, and the stock performed very well. The earnings performed very well, but the stock did not. And so the stock went down about 6 or 7%. And so what I did is, at the bottom of it, I opened a put. This put is already up about almost close to $400. I'll probably leave this open. I am very bullish on Intuit, believe it or not. It takes up a lot of collateral. It's like $60,000 of collateral. So I'm actually okay holding this. SoFi. I think SoFi may have its day in the spotlight very soon. I think this is going to break through its resistance fairly soon. Oh, these are my puts, sorry. So let's go ahead and open up SoFi real quick. So SoFi's been pretty good. You know, it's kind of been going on an upward trend, or trying to. I think if we were to draw a trend line here, I read somewhere that it was about to break the long-term trend. So I think it's going to be doing very good in the near term. Let's see what we have here. I have 1,000 shares of it. I think you sold 200 shares. So I got some calls assigned, some 750 calls assigned. So I've been reducing my position. I think it's going to do very well. SoFi is one of those stocks that's going to do very well going into the rate reductions. As you can see here, we're about to be going into $8. So right now I have $27 puts expiring at the end of the week, which I'm going to leave open. I've got $7 calls expiring 8:30, which are obviously very underwater. What I may do with these is roll them out as we get to the end of the week. There's still a lot of value in these. These 650 calls are very under the water, and I'm also going to just continue holding these. And truthfully, I'm going to probably hold on to them until after rate reduction, just because I think there's so much buildup in the market to these rate reductions that once it actually happens, people are like, all right, well, now what? And a lot of people just start taking profit. And there's usually a small correction shortly after. So I'm going to hold these to see if that is the case. If not, I'll just let them get called away. I have no issue. You know, I have plenty of premium that I've kind of snowballed, if you will. You know, what is this current price? Average credit. So 167. So I have a wow, look, I'm still even up on how much credit I got before. So there's significant meat on the bone there that if I let them get called away, I'm not too concerned. This $10 call that I bought for the end of the year, I'm still down 70%. You see, it's these leaps lose so much value. It's crazy. So anyways, long story short, it may be actually a good time to sell some calls on SoFi. So that's actually what I'm going to do right now. Got 1,000 shares. Oh, I think I'm fully booked on SoFi though. I've got 5 and 5, 10. Maybe I can sell one on this $10 call. So I'm going to sell a call. I'm going to sell an $8 call. Let's go ahead and do that. So the reason I was able to trade this is because it's using my long leap as the collateral in case it goes in the money. But that's why I have to put up the difference. So from 8 to 10, I have to put up $200 of collateral. And then from 10 upwards, the call takes care of that risk. All right. What else do we have here? So we have SoFi, we have Tesla. I'll touch on Tesla at the end just because it's such a large position. Let's go to Amazon. So this is AMZU. It is a 2x leveraged Amazon play. And the whole play with this is really buying a leap, but reducing the risk of the leap by selling a call, a short dated call. And you're basically selling calls against the leap, right? I think TJ the Wheel Deal touches on this a lot. It's a part of his strategy. I try it here and there. I haven't really gotten the hang of it, truthfully. What concerns me is that if you don't get the direction of the stock correct, then the value of the long dated leap loses so much. It loses so much value that even if you're selling calls against it, you're going to be underwater, right? Like, look at this call, right? I bought it for $590. It expires in 920, right? And I wouldn't consider this a leap, but it is a long dated option. But I'm down 400, right? Maybe I've collected about, I think I've collected maybe 200, 300 bucks on it. So best case scenario, I'm going to break even, right? But it could also, if AMZU goes all the way to 33 or further than 33, perhaps the value of the long dated call will go up. You see, I collected 80 bucks on this one. So, this is just a little kind of experiment I'm running with AMZU. JetBlue, I think airliners are going to be doing very good. This was just a strategy that I was using. So the strategy is you sell puts in the money, right? So I sold $5 puts in the money, $43 a premium, with the idea that JetBlue is going to outperform and go above $5 in the next month or two. Currently, I'm at break even. It hasn't really done anything, so I'm all right with it. There's a lot of extrinsic and intrinsic value. So if it was to stay where it is, there's about 20 cents of intrinsic value. So this will start going down to 20 cents, at which point I will still be up, even if this stays at the same price. So it's just an interesting strategy you can use on selling puts if you really believe that it's going to be going up. Riot, this is one that I followed TJ into war with. 750, it's almost at 850. I feel very comfortable with these. Sold them at 52. They're currently at 35. I'm going to let these run. These expire in about a month. Not very concerned about these. I'll probably close these out if I get to 50, 60% in the next week. So we'll see what happens there. Palantir is one that I am trying a different strategy on, and I'll tell you what that is. So I've been rolling this call. This call event the call that I had, the highest strike call that I had was at $30, but I had the sense that Palantir was very overpriced. I think 28, 29, 27 is really where it should be. And I think that it is going to correct in the near term. So I started rolling my call down. So I'm capturing all that premium in the meantime. And so right now I have a $28 call that expires 9/27. I collected $439 worth of credit on it. And, we're going to see how it goes. Truthfully, I'm doing very good on Palantir. My cost base is like 27 and change. So, we'll see what happens. But it's, some people ask like, all right, well, what if you think the stock is going to go down? Well, look, you have really two options. Let the call that you sold expire or get called away, and you're out. Or if you really like the stock and you want to hold on to your actual shares, right? What you can do is sell it, roll the call down strike. And if you're right, then you're going to collect a lump sum of premium, and it's a very good way to kind of ride the stock. Risky, but nonetheless a good way to make money. Palantir 28, American Airlines puts. We talked about these two. All right, let's get into Intuit, and then we'll get into call. So the Intuit play was, I bought one $690 call for earnings, and it didn't do so hot. I paid about $2,300 for it, and I sold a call at the same time. So what I did is I bought another one to average down. So I bought another one at 460. It's at 490. So at least I'm making money on that one. And what I'm going to do is I'm going to start selling calls against this leap, right? So if right now I have two contracts, I'm going to go to view options and I'm going to sell a call expiring. I don't want to go too far out. It's at 420. So if it's at 420, I'm going to sell one at like what, you see these premiums are not too hot. So I'm going to go ahead and go to September, 11 days. Oh, wow. These premiums are a lot better. So what I'm going to do is I'm going to sell one at 640. Let's see if we can get this at 200. So we got this one filled at 200. And this one, maybe we'll go a little short dated here. And this is going to be a little risky one. And the reason why I'm going to go a little risky here is because I can always roll these out. Let's see if we can get this filled. Nice. Okay, so we went ahead and did that. We just sold 2 calls on our 2 calls that we have. And the goal is to basically ride the stock up. That's pretty much the goal. All right, now let's go ahead and see what's going on with, we covered Palantir, Sophie, Clean Spark. Let's see what's going on with Tesla. Right now with Tesla, here's my position. Here's my goal with Tesla. I want to get rid of all these other random positions that I have. Maybe I'll hold on to Sophie and to Palantir, but I want to get rid of Clean Spark. I want to get rid of American Airlines, Riot. I want to get rid of all these other random fluffness, and I want to just buy the leveraged Tesla TSLL. That's what I'm going to do. I think Tesla is on the verge, and not just Tesla, but I think the market is on the verge of realizing that full self-driving is closer than many thought. Elon over the weekend posted on X a picture of their AI computer room, and it's incredible. So that's what I'm going to do. Right now, so let's go over my Tesla position. I have 1,000 shares. My cost basis is 173. Technically, my market value should be 216, but here's what happened. I was selling calls on it. This is a very real risk, and I got caught underwater. So I'm at 205 expiring in December. I'm not concerned, because I can roll. I don't care if I have to roll these till next year to capture the whole upside. I will, but I'm not letting go of these shares. So I'm okay holding on to these. But the beautiful thing is that if Tesla starts going down, my calls start performing, right? So today, because Tesla's down 2%, I'm up 6% on regained value on my calls. So it's not necessarily a bad thing. The only short dated one I have here is 197.50. which expires at the end of this week. I've got $2,000 worth of premium here, nothing crazy. And then I have a credit put here, which these are risky, but I don't think Tesla's going to go back down to that area. I am looking to open up this position. If the premium gets above what I pay for it, I'm going to keep opening up a couple of these until I get to 5. I think 5 is a reasonable amount, and I'll tell you why. Because it's an amount where if I need to, I can dismantle the put credit spread. And how do I dismantle the credit spread? I essentially sell the put, right? Because a credit put is you buy a put and then you sell a put. So what I would do is I would sell the put that I bought, so this one, which technically should be outperforming everything. Well, today it's going to be outperforming. And then I would then have this put with full collateral. So it's going to require $17,000 per contract. So it requires a lot of collateral. But then that gives me the option to then roll it down, right? And if Tesla ever gets to 170, then it's going to be concerning. So, we'll cross that bridge when we get there. I think right now it's still very healthy, 217, a lot of potential. We've got October 10th coming up. So that's pretty much it, guys. We went through everything. I think we're going to keep a close eye on a lot of things. I think my riskiest position is Intuit, obviously, so we're going to keep an eye on Intuit. But apart from that, if you guys have any questions, feel free to put them in the comments. I'm going to check the comments now just to make sure I didn't miss anything. And look, I try to do these every week. I think it's good to just kind of go through your positions and talk them out out loud and kind of explain your thesis on them. I share what I'm going to do in the next couple of weeks is I'm going to start I have a few trading rules that I stick to, and I'm going to start kind of going through each one of those rules. It hopefully helps you guys too. If you have any questions, the point of this channel is really to help snowball your hustle. Whatever your job is, whatever your side gig is, whatever money you make, options is the perfect way to snowball it into bigger and bigger and bigger amounts. And before you know it, your account is going to be, at a place where you didn't even know you could get to. And my goal with this account is to help you get there in a safe and stable way. So as of now, I am not seeing any questions that you guys want answered. Let me check YouTube real quick. Yep, I don't see any questions. So with that, we are now at 20 minutes. So I'm going to go ahead and end the live now, and I will see you guys at the end of the week. Thanks for watching, and I will see you guys later. Take care.